Hello and good morning. It's me, Kenny Bulgari, and I am back with my Dunkin' Donuts here at 6 o'clock in the morning. It is the second cup I've had, so get ready. I am Kenny Bulgari, your host of the party, and today is Thursday, December 10th. We are now 1/3 of the way through December. We've got 2.5 weeks to go. There's a lot going on, so let me fill you in on all the things you need to know. Markets continue to advance, but appear to be just getting a bit tired as we approach the all-time highs again. Pfizer and AstraZeneca make real headway against COVID and all of its cousins. Oil continued to advance. Treasury yields continued to advance. Investors are awaiting tomorrow's CPI report, and that's investors really around the world waiting to see what's going to be reported. And in finishing up, Feast of the Seven Fishes. Today is the 7th recipe. Bay scallops in a black truffle cream sauce served over shells. Oh my God, delicious. But we'll get to that at the end. Okay, so risk assets continue to march upward after a little bit of agita that it suffered 2 weeks ago. Pfizer announced that their third shot, the booster, when accompanied by the first 2 shots, is enough to neutralize the newest member of the COVID-19 family, Omicron. And that gave the left a bit of agita because what they want to do is continue to control the narrative. But apparently that's not happening. Omicron is not causing widespread anything. Not hospitalizations, not deaths, nothing. And while it might be more transmissible, it is proving to be nothing more than almost a common cold. Let's be clear. There has not been one death associated with Omicron globally. And while some may say it's way too early to tell, I say, look, man up. Get your vaccination and go on your way. COVID is here to stay, maybe not as a pandemic, but more like an endemic. Infections will become more common, mutations will appear, but severe outcomes, lockdowns, and new shelter-in-place restrictions are most likely behind us, unless you either live in California or New York City. We have vaccines, we've got better therapeutics, and that's going to help keep this under control. So it is time to move on, at least from an investment perspective. In addition, yesterday, the FDA cleared the way for AstraZeneca's COVID cocktail, a therapy that is made up of 2 monoclonal antibodies that is specifically for individuals that suffer from weakened immune systems due to a pre-existing condition or some disease or some ailment, or have a history of severe side effects from the other vaccines. This is big news. It is very big news, and it plays directly into my thesis above, right? So investors, traders, and algos loved it. And while stocks waffled around a bit in the morning, they did end the day once again higher than they were the day before. At the closing bell, the Dow showed a gain of 35 points. The S&P added another 14. NASDAQ was ahead by 100. The Russell added 18 points. And the transports once again bucked the trend and moved in the opposite direction, losing only 51 points. Not a disaster. The best performing sector was healthcare, XLV adding only 0.75%. The worst performer, consumer staples, the XLP, down 0.3%. So it wasn't a blowout day at all when we would see some sectors registering 2 and 3% moves, right? It was not that at all. The value trade, the SPYV, ended the day flat, while growth, SPYG, managed to gain 0.6%. It was kind of a boring day overall. The 10-year Treasury yield rose to 1.52% as bond prices fell. Oil continued to move up on the day, up 30 cents to 72.63, taking back nearly 65% of the price slide initiated on Friday, November 26th, but remains still about $10 below the 2021 high of 83.83. It is kissing the trend line at resistance at 72.93, but let's see what today brings. Right? This morning, oil is a bit weaker, trading at 72.05 a barrel. I suspect it's just going to churn. The JOLTS report, remember that? The job opening labor turnover survey? The expectation was for 10.4 million openings. The whisper number was 10.6 million openings. And the actual number came in at 11 million job openings. The number of job openings now exceeds the number of unemployed Americans by the most ever on record. Industries that need workers continue to be manufacturing, food services, hotel service, and educational service. The quit rate did decline, though, suggesting that employers are more successful at keeping workers they have. And that could be for a range of reasons. Maybe it's more benefits, maybe it's more flexibility, higher wages, or any combination of that. In any event, It was the highest reading on record. So for anyone saying they can't find a job, they just are not looking hard enough. There are 11 million jobs out there. Eco data today includes the usual suspects, right? Initial jobless claims of 220,000, continuing claims of 1.9 million. The Langer consumer comfort reading is also expected, but don't look for that to drive the action because it won't. Friday's economic data is what's going to drive the action. When we get the all-important consumer price index reading, the CPI, expectations for month-over-month of plus 0.7%, ex-food and energy of plus 0.5%, year-over-year, plus 6.8%, ex-food and energy of plus 4.9%. Now, if they come in at those numbers, they will be at the highs, and that is what the market is expecting. But if the whisper number is correct, the numbers will be even higher, which in this case is not good. You don't want that number to be higher. You want it to be lower in any event. Next week is the FOMC meeting, right? The Federal Open Market Committee meeting. It is expected that Chair Jay Powell will announce a doubling of the pace of the bond purchases announced just a month ago, while also hinting at a more aggressive rate hike next year. Why the pivot? Because inflation is now running at 30-year highs, and he's trying to stay in front of it versus behind it. My sense is, though, that he's lost that fight, and this will continue to play into my theme that the situation is worse than they're letting on, which is why I think the narrative has changed so swiftly. But hey, what do I know? I'm not on the Fed. It's just me and my gut. Okay, so now that they've done a stellar job, I will say the Fed has done a stellar job of telegraphing the next move. They've sent everybody, Bullard and Daly and Qualls and Bostic, to name just a few. And now Jay has even joined the party. So if anyone is surprised next week, if this is true, then I'd say, where have you been? I guess the surprise is going to be if he doesn't say it. And that then will only serve to cause more confusion in the minds of investors, as some will begin to question the Fed's credibility. In any event, this is not the time to fall asleep. Remember, Fed funds futures are pricing in 3 hikes for next year, May, July, and November-ish. That's 2 more than the initial conversation. It's 1 more than the updated conversation, and it's possibly 1 shy of the eventual conversation. So you have to stay on top of this, right? Because this is what's going to drive the action. This morning we learned that China's Evergrande Group has now officially been labeled a defaulter. And this now sets it up for a massive restructuring. Bloomberg points out that this development marks the beginning of the end for the sprawling real estate empire started 25 years ago, setting off a lengthy battle over who gets paid from what remains. Interesting. But nothing to worry about. Because while this is dramatic news for Asian investors and some global investors, do not expect this to be the black swan event that many are making it out to be. This is not a surprise at all. And if it is, you haven't been paying attention. The U.S. market is not going to go into panic mode on this headline. It does, though, pose a challenge for Xi and the party, right? The Communist Party, as they've tried to prevent this crisis from becoming a bigger crisis in China and across Asia. It is going to be interesting, though, to see how or if they even respond. I guess my sense is they're going to try to keep it quiet like they do everything they do. Like whatever happened to Peng Shui. U.S. futures are down this morning. The Dow's down 100 points. The S&P's down 15. The Nasdaq's down 70. And the Russell is down 12. Look, the recent surge higher has seen all the indexes gain about 5% across the board, leaving them just a bit below the all-time highs seen on Wednesday before Thanksgiving. So it does make some sense, especially ahead of tomorrow's CPI report and Monday's PPI report, which is the producer price index. Inflation is running hot. This is not a secret. The unknown is how exactly the Fed will respond, and not if rates are going up, but rather the pace at which the rates will rise is much more important. Clarity is key, and I'm not sure we're going to get that just yet. I suspect the conversation is going to remain very fluid, allowing the Fed to pivot again, if necessary, if the inflation data continues to come in strong. The chatter this morning is all about how there's still room for a Santa Claus rally. And I go, really? A Santa Claus rally? I would argue, and I have argued, that the Santa Claus has already come. The S&P has gained 10% from October 1st to November 25th. That was on top of the 15% it had gained up to the point during the year, taking the return up to 25%. Omicron came, knocked about 6% off the markets, Much more for some of the tech disruptor names. We've seen that. And now the recent moves over the last couple of days have taken the indexes almost right back to those pre-Thanksgiving highs, where it appears they are now running into resistance. So if anyone's expecting the markets to gain another 5% from here, which is, I guess, how you would describe a Santa Claus rally, if that's what they're talking about, between now and December 31st, I'd say, not so much. But let's see. Look, I'm defining, as they say, there's still time for a Santa Claus rally. Well, you got to define it. So could it be another 5%? Because is a 1 or 2% move from here really a Santa Claus rally? That's why I say I think the Santa Claus rally has already happened. In any event, 10-year treasuries are yielding 1.5% this morning, just a bit weaker from last night. And I suspect that if the tone remains muted, I would not expect yields to do much of anything. But watch as this morning turns the afternoon to see if suddenly we see anything that might indicate what we're going to see in tomorrow's CPI report. The implication here is that someone saw tomorrow's report today. I mean, someone must know what tomorrow's report is going to say by noontime today or 1 o'clock today. It's a report. The government collects the data. They run it through a big computer, and that creates the results. Do we all think this happens tomorrow morning at 8:30 on Friday morning, that nobody knows what the report is? Come on. In any event, it is what it is, but pay attention to see how the markets react later this afternoon. European markets are also just a bit lower, digesting their recent moves up post the Omicron scare as they await today's data and tomorrow's CPI report. There's no eco data in Europe this morning that's going to drive the action at all, and at about 6:30 this morning, markets across the region in Europe were all down about 0.2%. Nothing at all to write home about. Really a non-event, right? The S&P closed last night at 47.01 after trading as high as 47.05. And while 47.43 is in sight, it's not going to get there today. And if tomorrow's data is stronger than expected, it probably won't go there tomorrow either. If it's weaker, I suspect it might. Stay the course, but build yourself in some downside protection. That just makes good sense at these levels as we go into the year end, because we all know how quickly the narrative can change. Breadth does remain a bit questionable. More stocks are trading below their 200-day moving average versus above. So I'm just saying it's something to be aware of. Remember, you can text the word INVEST to 21,000 on your cell phone to get my digital business card. Feel free to download it, write it to your phone, send me off an email or a text, give me a call. I'm always happy to engage, talk markets, planning, thoughts, concerns, ideas. Anything that's on your mind. And remember, I will be on Charles Payne, Fox Business Today at 2 p.m. You can follow me on Twitter and TikTok at Kenny Polcari. You can get me on Instagram at KennyP1961. Okay, so here we go. It is dish number 7 for the big Christmas Eve Feast of the Seven Fishes. This one is bay scallops and a black truffle cream sauce. Oh my God, so delicious. So for this, you're going to need the bay scallops, the little ones, not the big ones, the little ones. You need olive oil, butter, heavy cream, white wine, shallots, garlic, black truffle, white truffle oil, salt and pepper, Brussels sprout leaves, 1 pound of medium pasta shells, and fresh grated Parmigiana cheese. Of course you need fresh grated Parmigiana. Okay, so this dish doesn't take that long to make, right? 15 or 20 minutes. Make sure you put a pot of salted water on the stove, bring that to a boil, get it ready for the pasta. Now in a large saute pan, a large deep one, begin with about a half a stick of butter and a splash of olive oil. Turn the heat up. Now add in the sliced shallots and the chopped garlic. Saute it in the pan for 5 or 8 minutes, just mix it all around, get it nice and sauteed. Now turn the heat up to high, get the pan really hot, and now add in the rinsed, patted dry bay scallops. You don't want them wet. You want them as dry as you can make them. You're going to hear them sear, right? Now, at this moment, add the pasta to the boiling pasta water because it's going to be about another 10 minutes. Now, once the scallops are seared, turn the heat down to medium and deglaze the pan with some white wine. You know me, I always use Pinot Grigio Santa Margherita. Allow it to steam off a bit. Now add the heavy cream and the shaved black truffle. Stir it well. Now you take the white truffle oil. This is key. Do not add too much because it's very potent. Add a little bit, mix it, taste it. If you need a little bit more, you can do so. But go easy because once you overpower it, you can't take it back. So go easy. Now, take the Brussels sprout leaves. You've taken them all off the Brussels sprout. You want to add the green leaves to this dish. Stir it around because it adds a beautiful contrast of color, right? Season it with salt and pepper, taste it, and adjust. Now taste the pasta. The pasta should be al dente. Strain it, always reserving a mug full of water. Add the pasta shells right to the saute pan with the scallops and the cream and the Brussels sprouts, right? Mix it well. If the pasta starts to suck up the sauce, you can add a little bit of that pasta water to reinvigorate it. Stir it, taste it, add a handful of grated Parmigiana, fresh grated Parmigiana cheese, mix it well, taste it again, serve it immediately. This dish is wonderful. You can make it for Christmas Eve. You can make it all during the year. In any event, the day is young. The sun is coming up. It's going to be another beautiful day here in South Florida. Until tomorrow, take good care.